next question is, what is going to be covered under my homeowner's policy? So there is a number of different coverages, and let me go over a quick rundown of each one. Your first coverage is going to be coverage A, also known as the primary structure. This is to cover the main structure of your house as well as anything permanently attached to it. This is going to include your flooring, your light fixtures, your toilet fixtures, your kitchen cabinets, etc. Anything that essentially is not intended to be moved. Your next coverage is going to be coverage B. This is going to be other structures. This is going to include any other buildings you have on the property. This can include sheds, fences that are not attached, detached pools, detached garages. You may have a workshop. Anything essentially that's part of the permanent property, but not the primary structure. Next coverage is going to be coverage C, also known as contents coverage. This is anything that you can take with you. This can be your kitchen dishes, your jewelry, your clothing. Anything if you move out tomorrow that you could pack up with you. And finally, you have coverage D, which is loss of use, and this is to protect you in the event of a loss. Now you can't use your house or you have additional expenses. Maybe you have to stay at a hotel. Maybe because you're in the hotel, you have to eat out meals because you don't have a kitchen, or you have to rent a house for a year while your house is being rebuilt. That's what loss of use is there to cover you for. You also have coverage E and F. This is liability and medical coverage. This is not to protect you. This is to protect you if something happens to you. This is to cover you in the event somebody else is on your property and gets injured. And come on, it's the American way. They're going to sue you because that's what friends do in America. And so if they get injured, there's going to be a little bit of coverage for their medical bills, as well as if they sue you, there's going to be coverage for that as well. Okay, great. I got a policy. What kind of damages would be covered under it? That's a great question. Now, understand there are many different policies out there, and each one is going to cover different types of losses, have either more or less. Now, if you're going to be occupying your house, then you want to get what's known as an HO3 policy. This is the policy that's going to cover the most. It's intended for homeowners, and essentially it's going to cover anything that's not excluded if it's sudden and accidental. Now, you have other forms out there that may be more basic, may only include fire, wind, etc., the basic coverages. And therefore it's important to know what policy you have and make sure you have the right coverages. Now, that being said, understand, even your HO3 policies, read those exclusions, get to know them. For example, many policies have a water cap on water damages. The limit is going to be $10,000 or $5,000, or it may not even have coverage. So you want to check what coverage you have over there. And the other thing you want to be aware of is flood is a separate policy. If you live in a flood zone, aside from the fact that your mortgage is going to require you to have a flood policy, regardless if you live in a flood zone, you want flood policy. What does flood mean? Flood means rising waters. Not that it's raining inside your house through the window and floods your house. It means that the flood water is rising. That is a completely separate policy, although there are occasional policies that cover flood. Most policies do not. It is typically a separate policy. Next question we get a lot is, how do I end up paying the premiums on my policy? So, as mentioned previous, the initial payment is going to be done at closing, part of closing costs. The title agent is going to handle that payment for you, although obviously you're going to be the one essentially paying it. Now, when you have a mortgage, unless it's a small mortgage, so if you're financing only 30, 40, 50%, the mortgage company may not care about it, but when you're doing a standard mortgage of say 80%, your mortgage company is going to require you put the funds in escrow with them. That means every month you're going to be making a payment into an escrow account, part of your mortgage payment. Your mortgage payment is broken down. You have principal, you have interest, and then you have escrow, which goes to taxes and insurance. Now, one of the things to understand is, first of all, they're going to sit there and project how much you're going to need, break it down to a monthly basis, and hope that covers it properly. Every year they're going to do an escrow analysis, and this is something to be aware of. This is one of the #1 reasons homeowners see their monthly mortgage payment go up, because insurance premiums go up every year, And unfortunately, sometimes they go up significantly. It's not unheard of insurance going up 20, 30% year over year sometimes. So keep an eye on your insurance every year when it comes up for renewal, see if there's other options, etc. But just be aware of this possibility of them raising significantly. The truth is, just because your house looks okay after a storm, it doesn't mean that's the case. See, here's the truth. You could have water intrusion, roof deck separation, framing shifts, electrical issues, window damage. It can all happen silently after high winds, hail, or heavy rain. And if you don't find these early, you may file your claim too late or not at all. And that can cost you tens of thousands of dollars. At Panther, we've seen homeowners walk away from real damage simply because they don't know what to look for.